But as I promised, Federal Reserve Governor came up with strong commentary surrounding labor market, employment, inflation yesterday, and what impact will that have on global commodities? To discuss exactly that, we are now joined by Naveen Mathur, Director Commodities and Currencies at Anand Rathi. Mr. Mathur, afternoon, and thank you so much for taking your time out and joining us here on ET Now. Traders perhaps believe that Powell was less dovish than expected, and this is precisely the reason gold is slightly off from the recent highs. What will your take be on the latest commentary and the kind of impact it will have on the metal market going forward?
Thank you, Ayesha. Good afternoon to all of you and the viewers too. See, what you said, Ashisha, is absolutely correct. Couple of the fundamental factors which are shown in the earlier in the show holds good. Yes, there was expectation of the 50 basis points cut, but it was not very widely held expectation. People were kind of balanced in terms of the 25 basis points. In some kind of, I would say, the downside which we have seen both on gold and silver being the bullion. But I would not agree to that particular point that people were expecting too much of the dovish commentary coming in from the Fed. One particular reason is definitely the tariffs, and that has come out, I would say, very openly in terms of the stance which the Fed would take. Yes, the unemployment, and the job market definitely has been a concern. We have seen numbers from 4.1 few months back to around 4.3 the last month, the unemployment numbers. So I would say that it's a balanced approach, both with respect to the job market, the labor market in the US, which is kind of bringing in some concerns. And at the same time, the Fed also has the responsibility to tame the inflation and not to get the price inflation risks out of control. And therefore, it's a very, very, I would say, a judicious decision of doing it at 25 basis point. They have said it very clearly that meeting to meeting they will go by and see to it how the data pans out. But I think the tariff and impeding, I would say, the inflationary concern basis the tariff definitely are holding up the Fed to go more dovish as of this particular moment. So two cuts further expected, as you rightly said, looks like to be from the dot projection and from the commentary coming in. The two cuts are expected for the rest of the calendar year 2025, and we have seen yesterday a 25 basis cut anyway. Talking about gold, Ashisha, I would say that yes, it has been a run, quite a long run, I would say, both in dollar and rupee terms for gold and silver. And I would say some kind of a profit booking at the same time, but it is not uh, just not the reason of the 25 basis point cut. It is just, I would say, a kind of a profit booking or consolidation, which would happen both on gold and silver prices. So currently, uh, we did saw over the last 1 or 2 days, 16th to be precise, 16th September, in dollar terms, the gold touch and high of around $3,703 per troy ounce. And in Indian markets too, we have seen 110,600, 700 levels touching on the same day. Even for silver, although we have not touched an all-time high, which was $49, around $49.56 levels in April 2021. Oh, sorry, 2011. So correct me, April 2011. It has not. We have not seen those levels as of now. We are hovering at around 42, 43 levels, which are almost in dollar terms 14-year high. But in India, in rupee terms, we did saw silver prices touching an high of all-time high of around 1,30,000 per kg. So I would say the markets are very well balanced out, both in terms of the commentary and what was expected from the Fed in this particular meeting, which concluded yesterday.
Understood. And since we are talking about gold and silver, silver is at the highest level since 2011. And as you said, gold hit an all-time high last week. But do you expect the momentum to continue in light of what Powell said yesterday? And how do you expect the trajectory to shape up going forward?
uh, I would say that that markets have anyway, Ashisha has discounted more or less now the two rate cuts. Uh, the decisions of the Federal Reserve would depend upon meetings to meetings as it comes in. Um, I would say that the good part this time is that the Federal Reserve actually, from the last meeting to this meeting, has dropped the word solid with regard to the jobs market. So they have little concerns, or I would say they have concerns with respect to the job market, and which is pro growth, and therefore whatever stance the Fed would take might impact dollar depreciation, the dollar index to go down, which would be positive for gold and silver, the dollar denominated prices, Ashisha. Having said that, the geopolitical risks continue, although they are not the way they were in August and September. We are not heightened risks what we have seen in August and September, but I would say they have kind of muted down to an extent, and the global markets have reacted very positively on the sentiments. Keeping in view of those, the risk averse assets might therefore see the momentum not the way we have seen it over the last few weeks and months. It might be a little slow momentum, but I would say that the safe haven demand of gold would continue to be would be a major factor. Having said that, we also have to recognize one fact, that central banks across the world, and I'm talking about not just the Federal Reserve, all central banks have moved or kind of de-dollarized their reserves. The Treasury today, across all central banks, the US Treasury in the Forex reserves is approximately $3.5 trillion versus gold, Ashisha, which is $4.5 trillion. So there is kind of movement of reserves from Treasury, particularly the US Treasury, towards gold. And that is one of the major reasons we have seen the demand from central banks coming in across the globe, including India, I would say. So mutual funds, the institutional clients, the central banks all are kind of a view that they should hold gold as one of the major reserves
Right.
into their portfolio. So I would say that the markets may go down a little, profit
Okay.
booking, but I would say that the means that it is not the right time to say that we would see gold prices at around 95 or 90,000 rupees per 10 grams, or silver prices at
Understood.
around those levels. So we would be close to these levels where we are, but there would be volatility and the downside risk
Right.
to an extent for
Okay, so
both the
we
bullion
see we are
commodities.
seeing downside risk and a lot of volatility. That's the word coming in. Mr. Mathur, thank you so much for taking your time out and joining us here on ET Now and helping us understand what the impact of Powell's latest comments will have on the yellow metal market going forward. But